The Dorfman Report, sponsored by Sprint and its new world of telecommunications.
Welcome back. What stocks are going to lead the way next year? A clue to this all-important question may be found in the latest purchases and sales of the nation's biggest institutional investors. Our financial correspondent Dan Dorfman reports that despite the uncertain economy, the big guns are fattening up their stock portfolios.
Despite all the talk about the uncertain economy, the big guys are really diminishing their cash reserves. Now stands as of December 20th, 4.8%. That's below 4.9% at the end of November. In other words, they think we're heading into a further bull market as we go into 1992. Now let's look at the stocks they're buying the most, the ones they want in their portfolio as the year comes to a close. Their favorite stocks: number one, Bankers Trust, AMR, AT&T, National Medical Enterprises, Archer Daniels Midland, Houston Industries, that's a utility holding company in Texas. We go on to Atlantic Richfield, UAL, we can see that one's really flying today. Fannie Mae, IMC Fertilizer, who says fertilizer can't be beautiful, Commonwealth Edison, and Amgen, a lot of people's biotech beauty. Now, which stocks are they selling the most? And this information, by the way, comes from data which monitors almost 1,200 portfolios, over $200 billion of equity assets. And the biggest sales: American Home Products, General Dynamics, Hewlett Packard, JP Morgan, Exxon, that was mentioned earlier today, that the stock was down, and finally, Bristol Myers Squibb, the stocks they do not want as the year comes to a close.
By the way, recall in yesterday's report, Dan quoted an analyst who is bullish on Commodore International, the personal computer maker. Well, in an update, Dan says that Wall Street's closest tracker of Commodore, Mark Stallman of Alex Brown, is also gung-ho. His 12-month price target on Commodore is $24 to $28 a share. Stallman also thinks that there is a good chance of a friendly sale of the company down the road, perhaps for a price as high as $38 to $40 a share. Commodore today was up $2 at 16 7/8. Checking our analyst moves file for this Tuesday. On the bullish side, Oppenheimer analyst Steven Eisenberg has repeated a long-term buy recommendation on Hilton Hotels Corporation. The analyst sees better fundamentals for both lodging and gaming next year. Hilton today was up a half at 38 1/8. Smith Barney analyst Michael Rosen adding Dow component Boeing to the firm's investment policy committee buy list. Rosen thinks the stock will perform well next year as the economy recovers. Boeing, though, today was down 3/4 on a big up day at 45 3/8. Dean Winter analyst Eugene Glazer has cut fiscal 92 earnings estimates for Apple Computer. Glazer says Apple does not have as big an order backlog as many had thought earlier, but Apple today was up 3/4 at 52 1/4. And Prudential Securities has cut earnings estimates for Inland Steel based on a slower than expected recovery. Inland today up 1/4 at 18 1/2. Sue Herera joining us now with a look at the futures markets and how they did today.
And quite a bit of action there. The S&P challenged its contract high, couldn't quite make it, however. Right. We had heavy volume there. The stock index futures started out on the plus side, and as a matter of fact, we did have a plus side early morning session. Then we saw the market dip. It ran right up past the 400 level, couldn't quite make it to the 404 contract high, however. Here's a look at the latest price quotes for you. They've all settled on the futures markets for this Christmas Eve. 403.40 was the high of the session, so we just missed it on the new contract high for the March contract of the S&P. Some of the early support came from the recovery in the bond market. Bonds dipped initially on the durable goods report, which was stronger than expected. Then a light short covering rally took the bond market back up at the end of the trading session, but it just barely eked out a gain. T-bond futures at the end of the day up about 1/32. Euro dollars and T-bills hit by profit taking. The thought is that given the Fed's aggressive move on easing, analysts that I've talked to say that the Fed probably won't move in the near term on interest rates. T-bills and euro dollars a little bit overdone technically as well. Traders took profits in both of those sectors, put it in the intermediate term securities and to a certain extent in the long end of the market as well. The 10-year T-note managed to add on to yesterday's gain of almost 17/32. The dollar recovering after an almost 3% fall between Monday and Tuesday. The dollar coming back a little bit against the major foreign currencies, but not enough to change the technical configuration of the market. And foreign currency analysts, those that were in their offices today, say they still expect a test of the 150 and then the 145 mark against the Deutschmark for the U.S. dollar. Precious metals activity. The durable goods report should have been somewhat bullish for the industrial metals. It did not help platinum at all, however. The silver market did rebound, but it failed to move above the psychologically important $4 an ounce mark. The copper market bounced back, and that was technically somewhat bullish given the fact that it did so in the face of a large upswing in LME warehouse stocks for copper. Better than 8,600-ton rise in the LME warehouse stocks that weighed on the market in the London session. In the bean markets, profit-taking after yesterday's big rise. Wheat up a little bit on better-than-expected export news. Egypt will most likely be in the market for export enhancement bonus wheat on Thursday. There is also some talk that the growing areas in South America are being hit by some flooding, and that may help the market overall. That would include soybeans, but the market in soybeans yesterday paid attention to that, did not do so today. Meat and livestock sector. Cattle market up on a short covering rally that also is pegged to the idea that the economy is getting better because consumers tend to back away from red meat purchases that are more expensive when the economy is not doing well. They tend to go to the grain markets and the pastas and things like that. Live hog complex was firmer early on, but it gave up some of that strength. Pork bellies were supported by a bullishly construed USDA cold storage report, showed less bellies in the freezer. In the industrial sector, the lumber market managed to add on considerably to yesterday's gains based on the better economic outlook, up $3.10. Cotton market bounced back too. In the industrial sector and crude oil, we managed to push higher and hold above the $19 a barrel mark for much of the session, but not at the close. Up 19 cents on the day. That's also what kept the bond market in check at the end of the day. And in the soft commodities, the coffee market under continued pressure with life of contract lows made early this morning. It continued to do so throughout the trading day. Cocoa down a little bit on the rebound in the U.S. dollar and also profit-taking after a big gain yesterday. Orange juice just a fractional move for that market. And in the CRB index, we added on another 1/4 point today as the market adds on to yesterday's big advances that were made on the move in the grain markets and the soft commodities. The gold index, we did have some light short covering in both gold and the oil index early this morning, but the markets couldn't hold on to those advances. That's a look at the latest on the futures markets. There you go, sir.
Merry Christmas.
You too.
And we'll see you tonight on Business View, right?
On Business View, that's right.
Great. Sue Herera joining us there. That's it for this first hour of Market Wrap on Christmas Eve. I'm Bill Griffith. Ted David continues the second hour, and I want to wish you all a very, very Merry Christmas. We'll see you later.
I have a confession. I have no idea how to choose a long-distance calling plan. I don't have to. Sprint does it for me. They keep track of when and where I call and actually let me know which calling plan will save me the most money. They do all that just because I'm a Sprint Priority customer. And I thought it was because I was their spokesperson.
State Farm sells life insurance, and when we start you out with a life insurance plan, our job is just beginning. You see, we're there after you buy the policy, keeping in touch as your life changes, listening, explaining, answering your questions, helping you keep your life insurance plan up to date as your needs change. State Farm agents are there to start you right, and we're there to keep things right for the people you love.
State Farm sells life insurance.
Investors, here's Martin Zweig, who manages over $4 billion investment dollars, to tell you his stock market secrets.
I have two sacred rules. 1, don't fight the interest rate trend. 2, don't fight market momentum. If you can spot meaningful changes, not just zigzags, in interest rates and momentum, you'll be mostly in stocks during major advances and out during major declines. This kind of strategic switching over a period of 21 years produced 10 times the profits of simply buying and holding the stocks. My new guide to market forecasting tells all about my key indicators, which led to those huge rewards, and how you can use them. Please accept the guide as my gift.
Receive Martin Zweig's new guide plus this $20 bestseller as bonuses with your trial subscription to the famous Zweig Forecast, keeping you up to date on all key indicator changes. Just call 800-342-5856. Use Visa or MasterCard. 800-342-5856. Call now.
Good afternoon. Welcome back to Market Wrap. I'm Ted David. Kathleen Campion is off. Quite a ride on Wall Street today, following on the heels of yesterday's 88-point run-up. The Dow shot up more than 50 points at one point today, triggering a curb on program trading, but profit-taking pulled the Dow back from what could have been a record-high close. Still, we did set a few new records. Let's run through the numbers from Wall Street for you. The Dow Jones Industrial Average up 28.40 points, 3050.98. A New York record, well, it's a new record for the New York Stock Exchange. The NYSE Composite Index up today. Let's take a look at that. Up 1.52 to 219.65. That eclipses the old record of 219.33 set on the 13th of last month. Breadth today decidedly positive, 1267 to 427, with 442 stocks unchanged. Average share of big board common stock today picking up 24 cents. Let's look at new highs and new lows and see how that shook out. 190 stocks making new highs, 14 stocks making new lows. As far as the transports went, up 28 to 1286.06. Utilities down 3/4 of a point today to 219.95. S&P 500 cash, another record setter today, up 2.5 points to 399.33. S&P's previous record high was 397.41, also set on the 13th of November of this year. As for the secondaries, some progress, but no new records. Amex up 1.92. Can we go back to the other screen and we'll give you the complete numbers there? Thank you very much. Amex up 1.92 to 372.85. The NASDAQ Composite Index up 5 2/3 points to 549.55. The 30-year Treasury bond now up 2 ticks at 105 and 21/32. Treasury markets closing at 1 p.m. Eastern Standard Time today. The yield remaining at 7.52%. Some holiday cheer from the government today in a report that casts some positive light on the economy. Commerce says new orders for durable goods from U.S. manufacturers rose an unexpected 1.2% in November. Last month's increase followed a revised 2.6% gain in October orders. The November orders improvement a surprise because Wall Street economists were looking for a 1.3% drop. But some experts point out that the report was not completely bullish for the economy because much of the increase was in the volatile transportation sector. If you exclude transportation, durable goods orders up just 0.2% last month. Minus defense orders up 4.1%. In our Reporter's Notebook segment today, it was the best of years, it was the worst of years. In this case, we're talking about the year in real estate. Bob Pisani, our real estate correspondent, joins us now for a look at what did or didn't happen. Bob?
Well, you know, it's not just a bad year or a good year. It was a bitter year for housing this year. And I say that because mortgage rates hit historic lows. As the year went on, they went down and down. We're expecting 8.25% in the next couple of weeks. On top of that, if we can get our first screen up here, you'll see that new home prices, after going through the roof for the first several years throughout the 1980s, have now leveled off in the last 3 years. And those two facts in combination should have pointed to a great year for home buying, but it wasn't. Nobody came to the party this year. New home sales went nowhere since February. Existing home sales were up in the first half and way down in the second half. And most bitter of all for the housing industry, if we can get our second chart up here, you'll see new home sales, after going up and down for many years, have hit historic lows. In fact, the lowest starts in 45 years since World War II.
All right, let's go back to median home prices, 122,000, obviously in many areas higher than that, but still, you say no one came to the party. Was that an absence? I mean, certainly the mortgage rates were accommodating. Was that an absence of consumer confidence that really led to that?
Well, I think that's the big factor in the second half of the year. But as in the beginning of the year, things were pretty good. And I think the big missing factor here is that move-up buyers. You know, the baby boomers bought their homes in the beginning, in the early 1980s. Now they want to move up. They want to sell their homes. They don't have anybody to sell it to. The first-time buyers are having trouble moving into these homes. The prices are high. And in the Northeast, they're sticker shock. They don't want to sell them for less than they really are worth right now. So there's a problem. We've got to figure out a way to get these move-up buyers into the bigger homes and the first-time buyers into those old homes.
With regard to the second chart, housing starts, who traditionally buys the new single-family homes? Are those people looking to trade up, or are they the first-time buyers?
No, traditionally first-time buyers account for about 20% of the new homes. So it is the move-up buyers who are really interested.
So this is a whole backup in the chain then, basically.
That's right. And it's a feeding chain. You know, the little guy eats the bigger guy, the other way around, actually.
So what's your expectation now? You said, what was the number you pegged 30-year mortgage rates, 8 1/4?
We're going to see 8 1/4 within, I believe, the next 2 to 3 weeks. They're about 8.5 right now, but they're going to course downward for the next several weeks.
Clearly, that increases the housing affordability index. It adds people to that, doesn't it?
Yes, and in fact, the interesting thing is that the after-tax income it takes to buy a home has been dropping steadily for the last couple of years. Another reason why housing should be better.
So is the key then to an improvement in the real estate sector, and as Bill Wallman has said, our chief economist, any number of times, the key to the recovery will be a key to a recovery in real estate. Is the key here consumer confidence, that John and Jane Doe don't feel they're going to lose their job and are willing to make that 30-year commitment?
I think that these move-up buyers have got to figure out a way to get into their homes. Prices have got to remain stable, and on top of that, we've got to see some improvement in the economy.
Okay. Bob, always a pleasure. Have a very Merry Christmas and Happy New Year.
Too.
See you again. Bob Pisani, Reporter's Notebook. Checking stocks in the news in today's trading, Cray Computer shares plummeted after that company lost its only customer. Cray Computer finished the day today down 5 1/8 at 5 3/4 on a percentage basis, a rather substantial drop. Late yesterday, Lawrence Livermore National Laboratory decided to switch to an alternative system offered by Cray Computer's competitor namesake, Cray Research. Cray Computer, by the way, is a company founded by Cray Research founder Seymour Cray after leaving that company. Cray Research, incidentally, finished up 3 1/4 on the session at 37 3/4. Citicorp shares, what did they do today? Well, you see, ended up 5/8 at 9 3/4. As we reported in our After the Bell segment yesterday, Duff & Phelps downgrading $25 billion in Citicorp debt, citing the weak economy. The Dow component Disney finishing up 1 3/8 today at 111 1/8. Disney has given up its plan to offer a zero coupon bond with interest based on the financial performance of its television shows. The bond carried a 4% yield to maturity with additional interest depending on how those TV shows did in the ratings. Well, Disney has now canceled the offering since interest rates have dropped dramatically since it was originally proposed. John Murphy up next with Tech Talk here on Market Wrap. We hope you'll stay with us. We'll be back in just a moment.
I have a confession. I have no idea how to choose a long-distance calling plan. I don't have to. Sprint does it for me. They keep track of when and where I call and actually let me know which calling plan will save me the most money. They do all that just because I'm a Sprint Priority customer. And I thought it was because I was their spokesperson.